Hello everyone, welcome to the channel. André Cardoso here, sharing with you some insights inside the Forex market. Let's delve into some of these patterns. Let's start with the Dixie, the captain of the ship, now facing major support level at 160. That's the major support from last December, which has been holding for, or at least until now, that we are retesting or threatening those same levels. We have some patterns that may start to emerge for the Dixie at 99.81, specifically a bullish crab pattern projected at the golden Fibonacci extension. If you increase your time frame into a weekly time frame, you can see there's also other possibilities. The attack to 93.43 is another possibility to discuss later that we have here projected on my charts. But as we can see, this is a major support level. Let's consider also the possible bounce for the Dixie from this price zone, eventually just towards the previous support level from the, let's say, last week support 102.27. A small bounce towards these levels of support will not be a surprise for the Dixie, or eventually even a small period of consolidation before more downside momentum. We discussed this possibility later before in December, when I started to project a potential or eventual cup and handle inverted cup and handle pattern formation. We discussed the possibility of a drop, especially because the price, if the price at that time started to bounce, we will consider this as a triangle or a consolidation triangle, and usually that always push the price in the direction of the previous swing, or the swing prior to this the triangle formation. So we always tend to project more lows once we identify a fast swing to the downside, and then a huge consolidation process printing this triangle. We always tend to expect the violation of the structure and more bullish momentum. And as I said before, it can happen, and if that happens, we will pay attention to the eventual reinforcement of this ascending momentum, or this ascending trend line support of this channel on the Dixie. But as I was saying, if you go into a lower time frame, there's also other patterns that may start to emerge, specifically at the golden Fibonacci level. As I said, 99.82, that's an important level to consider, right below the monthly fractal support levels. Just a few points below, there's a bullish crab pattern. Basically, we are adjusting into the previous swing to the upside, so that's an extension of that same swing extended below at the golden Fibonacci extension level. So that this will be ultimately the level for the, let's say, for the Dixie to survive the next drop, or the next huge window that will open if the price can't find support at this price zone. Of course, if that happens, if the Dixie keeps trading lower, the cable may trade higher, as has been showing recently. The weak dollar translated into a bullish or a strong bullish cable. We have also, let me increase my time frame and change a few things here. We have also a bullish butterfly pattern for the cable, projected at 134.46. That's a 127% Fibonacci extension level. There's also the 78.6% Fibonacci of the last swing low. So let me try to show you these. So we are talking about the 78.6% Fibonacci level of all these move to the downside. So we are facing already the 78.6% Fibonacci retracement level. It's always a Fibonacci level to consider as a potential pressure level. So 134.46 bearish butterfly pattern for the cable. Of course, the euro versus the dollar also facing the monthly fractal resistance at 111.39. We have already a new fractal above at 111.74, but it's important also to consider the, let's say, the possibility of a retest of the previous support, or this previous ascending support line. We keep trading below this structure, or this previous structure support. We have been trying to recover that same structure, but it has failed to do so. And at this point, I will not be surprised to see this major fractal resistance and this previous resistance acting as elements, or this previous support acting as potential element of resistance for the euro versus the dollar. Eventually, if the price starts to pull back, I always track the 38% Fibonacci. Actually, I track the Fibonacci levels, all of them, with particular interest to the 38% Fibonacci retracement level, which of course we are talking about a significant pullback. 109.72, that's a significant pullback for the euro versus the dollar, almost a 1.8% Fibonacci, 1.8% pullback back to the 38% Fibonacci retracement level, if somehow the price starts to pull back from the current price zone. So as I said before, we have that pattern completed at 110.85. I was expecting the butterfly pattern to put some pressure. I also discussed the possibility of an attack to this previous monthly fractal resistance level, even considering even considering the bearish butterfly pattern. If you are approaching a major fractal, we always need to consider this range between the completion point and that fractal resistance, so that remains as a threat to the fractal printed above 111.39. So at some point, if the price starts to pull back, I always adjust the potential retracement to these Fibonacci levels. The same may happen for the Aussie, now facing major resistance. So this is the weekly fractal resistance for the Aussie. I admit the pullback. Let's also decrease our time frame. I also admit a possible momentum of consolidation, kind of a bullish flag pattern. If necessary, something should happen here for the Aussie in order to consider any type of involvement. I was discussing earlier today the possible edge and shoulders. That's one of the possibilities if the price starts to pull back again towards this previous support level. If the price starts to bounce, of course we are far from those movements to happen. This is pure speculation, but that's just one of the possibilities. Major support, weekly resistance. If the price finds that pressure, it may bring the price back to support or the previous support, and if that happens, we start to think about that eventual edge and shoulders pattern formation. Ultimately, even if the price starts to form that pattern, do not ignore, let's say, even forming that edge and shoulders, or suggesting the formation of the edge and shoulders. Usually, actually not usually, but sometimes the edge and shoulders pattern acts very well as support for more upside momentum. Sometimes if the price fails to break these levels of support, and sometimes the price will attempt to break multiple times and reject the idea, and if that happens, sometimes the market will be a nice opportunity also for those who search for longs for the pair. So if the price pulls back to this previous support level, eventually it will be also an important price zone to consider, to apply a risk strategy and to try to engage the market to the upside, expecting more momentum to the upside. Of course, the edge and shoulders pattern formation, it's only valid once the price breaks below the neckline, and if that happens, of course, you have your trade already triggered, so that you don't need to wait or expect anything rather than the pullback. So Aussie, a process of consolidation, potential consolidation process starting to unfold after retesting this weekly fractal resistance level. That's what I'm expecting to see, at least at this point. The Kiwi bearish butterfly pattern 162.37 already completed. I do expect a pullback. That pullback should target the 38% Fibonacci level. That's the default target for the butterfly pattern formation, and the reason why I'm posting also that pattern extended to the golden Fibonacci level. Some of you are already aware the bearish butterfly pattern can very easily turn into a bearish crab pattern. So if for some reason the Kiwi not capable to find resistance now that we are retesting these fractal levels again, if it can't find pressure to the downside, we may see the price squeezing higher. Okay, but the same I am expecting for the Aussie. I'm also expecting for the Kiwi. I will expect a period of consolidation below this fractal resistance. Eventually it may bring the price back to those levels or not, but only the time will say. But for now it's important to consider we have a completed bearish butterfly pattern, and that pattern suggests a pullback very similar to the ones that we have before. We have here, just to reinforce this idea that this is not something that we are speculating. Actually the patterns are there, so we just need to react or not. Okay, so there's no speculation here. So this is a bullish bat pattern, this is a bearish crab pattern at 62.25 previous highs, you know. So there's nothing wrong with these. There's no speculative moves here or speculative projections. You know, there's a bearish butterfly pattern, and that pattern should produce a retracement. If it will, it's a different story. Only time will say if it will or not. But there's a butterfly pattern there to consider, and now that we are facing major resistance level, that will not be a surprise at all. If that happens, of course, if the Kiwi starts to pull back and reacting to the butterfly pattern, two things may happen for the Aussie versus the Kiwi. One of them moving sideways, or it starts to bounce, of course, and eventually a retest of the previous lows again will not be a surprise. We have also, if that happens, of course, we may consider the formation of kind of a trend line support holding these lows, you know. So if the price starts to bounce significantly, we need to consider the establishment of an ascending structure or ascending trend line support. Also to point, the bearish butterfly pattern, nice pattern that we projected before we do here in the channel. Double bottom, actually double top, a broken neck. Once the price breaks the neck, moves to the downside, it finds new support and down, and then a bounce towards the golden Fibonacci retracement level. Once that completes, or once that sequence completes specifically, we start to anticipate the move to the downside, so a symmetrical move to the downside. So we start to project that move, which will also complete, as I said before multiple times, this will also complete the ABCD pattern, a symmetrical ABCD pattern below support. So wait for that pattern to unfold. If then, as I said, important price zone at this point. Let's see how the market will behave. Dollar versus the Canadian failed to hold above the previous levels of support, the weekly fractal support level 135.82, not capable to hold, and actually just a very small and shy reaction to the formation of the bullish shark pattern at 35.82. Very shy reaction, forming new fractal resistance at 36.18. I was expecting some type of retest, you know, retest of the low. Let me try to exercise that. So we have these previous lows, the formation of the pattern. I was expecting kind of, you know, three waves at least. start the move to the upside, eventually targeting the 38% Fibonacci level, which never happened. So you can see very shy move, and then a violation of the pattern, invalidation of the pattern, and a violation of the support levels, triggering more downside for the dollar versus the Canadian, which may suffer more downside momentum, eventually searching for these trend line support. Now that we are covering dollar versus the Canadian, it's a nice time to approach crude oil, eventual double bottom right there. So we have the first lows and the second lows right there. Actually, the market failed the technical double bottom just by a few points, but if the price breaks above these $80.33, that may trigger a nice move towards 87. So that's the default projection for the double bottom on crude. And of course, if that happens, we will talk about that possibility later. If that starts to unfold, of course, if the price approaches these highs, we have also patterns projected at 86.35, immediately below the default projection for that double bottom. Of course, if crude oil keeps trading higher, dollar versus the Canadian keeps trading lower. That's how things work by default. When I say by default, it's because sometimes the market will not be so related. So sometimes you have crude squeezing higher while the dollar versus the Canadian starts to move sideways or inverted. I've seen crude oil trading lower and the dollar versus the Canadian just stabilizing or just moving sideways. So that being said, it's not always so correlated, but usually when we project huge moves or higher moves or big moves above a structure support or resistance level for crude, we tend to consider the inverted reaction on the dollar versus the Canadian. Let's move forward. Dollar versus the CHF, now approaching previous support level again. We projected and we discussed this pattern before, 84.34. That's the 88.6% Fibonacci retracement. We saw this bounce as we expected towards the 38% Fibonacci level. These may act as a potential double bottom also for the Swiss franc. And if that happens, of course, we need to see, first of all, the price starting to bounce and then ultimately the violation of the resistance. If that happens, we may see the pair recovering to 89.23, which is a default target for that specific pattern. Another thing that I want to call your attention to is the previous price behaviors for the Swiss franc, which has been trading inside a 5-wave structure. As you can see, the first one to the downside, followed by another 5 waves to the upside, and a nice 3 waves to the downside already completed, and the 4th wave bounce. It looks like we are unfolding, or it may unfold into another sequence of 5 waves. I have already projections below the monthly fractal support, which is basically wave 5 equals wave 1. Actually, it's not projected below the monthly fractal. I need to adjust these. Just actually right above the monthly fractal, we have a projection for a symmetrical, what we may consider a symmetrical 5-wave structure to the downside, where wave 5 equals wave 1, following some of the theory behind the 5-wave structure as an impulsive wave in the market. So basically, or Ellioticians may be able to explain you in detail these price behaviors, but usually that's the only sequence that I try to identify in the markets, following the theory of Elliott, the 5 waves to the upside or 5 waves to the downside. And as we can see, if the price breaks below this weekly fractal support at 84.33 or 84.31, it may form that same sequence. So just to say that an approach to the previous support. So we are facing these, we are talking about this support level from December. So if the price approaches again these lows from December, that's because the market unfolded into a 5-wave structure to the downside, and the same reaction I will expect, or the same bounce I will expect after the formation of a 3 or a 5, in this case a 5-wave structure to the downside. I will expect at least a 3 waves to the upside, at least. The same way once the price completes a 5 waves to the upside, I will expect at least a 3 waves to the downside. In this case, a very extended third swing, as we can see.
Hi, my name is Blake Morrow, President and co-founder of Forex Analytics. If you're watching this video, that means you're in search of a trading coach, a personalized coach that can help you get to where you want to get in the markets. Whether you choose myself or one of our other well-qualified coaches, it's up to you. Every one of us comes from a different background, and every one of you looking for a coach comes with different needs. So make sure you go through, peruse all of our coaches, read their bios, watch their videos, see which coach is going to be best suited for you as an individual trader. And I'll see you in the coaching session.
Even though it's there. So that being said, pay attention to these possibilities also for the Swiss franc. The Norwegian krone has found support just above, actually just above the 113% Fibonacci extension on today's session, not last week after all the data for the US. After today's sessions, we are already approaching the 113% Fibonacci extension, so we are basically facing the potential bullish alt pattern also for the Norwegian krone. Don't get surprised with a bounce from these price levels, and if that happens, I will anticipate a move towards a 38% Fibonacci retracement level. Mexican peso, I think we discussed this pattern last week, this internal or this lower time frame golden Fibonacci. I'm not sure if I did. If I'm not, I'm sorry for that. But this was one of the patterns printed for the dollar pairs, specifically for the dollar versus the Mexican peso. Golden Fibonacci extension level completing the bearish shark pattern. We always consider the potential pullback to the 50% Fibonacci level. As you can see, we have the 50% Fibonacci at 1906, support and a bounce. Eventually, we will see more momentum to the upside after this sequence. I always tend to consider, now that we completed the first sequence, I always tend to try to anticipate the next move towards the 224% Fibonacci extension level. 1975, we will be here next in my next video during the next days for sure, discussing that eventual pattern, the 224% Fibonacci extension. Basically, it's a shark pattern. Instead of using the golden Fibonacci extension level, the same may happen at the 224% Fibonacci extension. I will expect the pullback. The dollar versus the yen. Some of these pairs we discussed. I discussed it before on my video, specifically related to the Japanese yen pair. So I advise you to go there and check that same video. So at this point, we need to keep adjusting the price structure for the dollar versus the yen. I admit a possible retest of these lows again. We have a nice fractal resistance at 149.40, so that remains as our fractal resistance level, and we have major support at 141.63. As I told you before, golden Fibonacci putting some pressure to the upside right there last week, 144.62. nice reaction, a nice small reaction to the upside, and it looks like it keeps inside what we may consider a momentum or a descending channel to the downside. Let's see if the market will at least approach this weekly fractal resistance support level. But even though, if you want to explore more about the Japanese yen, the Aussie, the euro, the cable, the Kiwi, all of them, so just check the video that I posted before specifically related to those Japanese yen pairs. Euro versus the pound, we discussed this very sharp pattern before. Last week we approached the golden Fibonacci extension level. We are now facing previous fractal resistance. If the price can't find support at these levels, we may see the attack to the previous lows, eventually 84.09. There's also the 88.6% Fibonacci retracement level. So some of you are already aware the pattern that I'm projecting at this 88.6% Fibonacci level. We are talking about the eventual BAT pattern at the 88.6% Fibonacci level. If that pattern materializes, we may expect a bounce very similar to previous reactions, and in this case we have the 38% Fibonacci level, as you can see right there, synced with the previous support level. We have the monthly fractal support, and this is the default target for the pattern if completed at 84.09. So I will expect kind of a move, a move from the 88.6 to the previous support level for the euro versus the pound. Euro versus the Aussie remains below. Actually, we are threatening that violation of support, so I admit that a clear violation of these most recent lows, 164.54, a clear violation of the support level or the most recent support level may trigger that move to the downside. Pay attention to that head and shoulders pattern formation. Euro versus the New Zealand, also another one with the head and shoulders. We expect a move towards the 200% Fibonacci extension level, 78.48. There's convergence between the 61.8% Fibonacci level and the 200% Fibonacci level, so also consider that price zone as a potential cluster to find support for the euro versus the New Zealand. The pound versus the Aussie, expanded triangle, reacted once the price approaches the highs of the triangle again, 38% Fibonacci level. Actually, let me rephrase this because this is not correct. Let me adjust those retracement levels again. 38% Fibonacci retracement right above at 95.62, and the price reacted to the resistance of this kind of an expanding triangle, as you can see here. So I do expect more downside also for the pair from here. The pound versus the New Zealand, very much the same, pushes to this trend line resistance, approaching from above. If that keeps putting some pressure to the downside, I will expect more momentum also from the pound versus the New Zealand, and eventually a violation of these levels of support. If that happens, let me delete this golden fib. Actually, let me go and cross this to the left. If this happens, if the price breaks below these levels of support, we should also pay attention to other patterns. Let me also just measure something. We have the 88.6, exactly as I was expecting. So we may consider an extension of the last swing high or this move to the upside, and I will search for the golden Fibonacci extension 207.82. That should be equivalent to a 78.6 perhaps. 78.6% Fibonacci level, between 78.6 and 88.6% Fibonacci level. So we have also, if the price breaks below this support level, at some point you should start to consider the bullish crab pattern below. So that's the bullish crab pattern at the golden Fibonacci extension level. So, but of course, I don't want to, this is not an attempt to anticipate the short. I'm not sure if the price will trade lower or not, and that's a very dramatic mistake that people tend to do when I start to project patterns below or above. Oh, you think the market will trade higher? No, I don't think the market will trade lower in this case. But I know if the price trades lower, I know what to expect: a fall and a drop below the support, and I know what to expect once the price approaches these levels. I will expect a bounce. Okay, so that's what I make. That's one of the reasons why I project those patterns, because I want to be here once the price achieves those levels. I don't want to, I don't care what the market will print inside this range, and the market can stay here for undetermined periods of time, and I'm out of this process. I want to know if the price falls into an harmonic manner, an harmonic fashion way. If the market drops below the support and trades these levels, I know the market will form that sequence, that pattern specifically. Okay, I don't care. I'm not saying the market will trade lower. I'm saying I will trade higher if the market achieves those levels. The same way, if I project a pattern above, and I can project a pattern, let's say 88.6, eventually we have an internal swing that creates some divergence here. But even if I assume this as a potential, a bearish bat pattern at the 88.6% Fibonacci level, I'm not saying the market will or should trade higher. I'm saying if the price trades higher, and once it approaches the 88.6, I know exactly what to do. Okay, it's a bit different than saying, okay, you should buy the market there, because you should buy the market here. You should buy the market there because I know the price will move towards these levels, and no one can give you 100% sure about. No one can be 100% sure about the next move in the market. We can have a very decent probability of what the market should do based on a specific price behavior, based on a specific, even a fundamental reason. So if you have some politicians starting to argue and starting to push some policies that you think may trigger the market in some direction, eventually the fundamentals approach may work in that process. But even though you are never 100% sure about what the market will do next. So that being said, we always need to do is simple: it's to search for a specific pattern that offers you the best and the most reliable probabilities in order to apply a risk strategy to trade those patterns. Okay, so but again, I can project patterns above. That doesn't mean I believe the market will trade higher. In fact, as you can see, the market has been trading lower, so the path of less resistance remains to the downside, unless if the price starts to break above specific price zones. In this case, we have the daily fractal, $2 or 2 New Zealand dollars and 15 cents. And so that being said, only if the price breaks above the daily fractal, you should consider that possibility. Until there, the path of less resistance, as I said, remains to the downside. That doesn't mean I believe the market, or I am sure. So actually, I believe the market will trade lower, but I am not sure if the price will trade lower. So that doesn't mean I should pick my positions to the downside. Okay, So I think I made myself clear. I don't want to misunderstood my point of view. So just because we have patterns below or above, that doesn't mean we are bearish or bullish at this point. If we are talking in a situation where we have already a pattern completed, that's a different story. So that changes my perspective. Once I see the formation of the pattern, so once I see the formation of the sequence, I start to admit, okay, now that's time for a retracement. Okay, and even though, as you can see, the price moved above your entry point for a bit before starting to pull back. So that being said, just to clarify, just because we have patterns projected above or below, that doesn't mean the price will complete them. And to finish with the pound versus the New Zealand, we still, let's say, stuck inside this range. So while inside that range, we should not try anything. Let's now move to the commodities and also the equities. We have gold remains above this previous resistance level. It's important to keep above these levels. Let's see how the market will behave these next sessions. This may work as a double top. Of course, we are always considering everything. If this unfolds into an head and shoulders, into a double top, of course, we should consider the neckline, which comes at place at 2470. So if the price breaks below these levels, confirming this V shape for the double top, so we need to consider the drop below the support level, even though bullish for the gold while above this previous resistance level. Only if the price breaks below or recovers this previous resistance will change my perspective. I keep my bullish stance on gold. The same may happen on silver. Let me only check. Of course, we have bearish divergence here. Last week I called your attention to the bullish hidden divergence between, let me also increase my time frame, 4 hours time frame chart. Last week I called your attention to this clear sign of bullish hidden divergence. We were approaching this previous previous resistance level, correct? And the price starts to print some bullish divergence. So if you compare the previous lows right there, the previous fractal, with your RSI, you can see this shy pullback already approaching the lows on RSI. This is a clear sign of bullish hidden divergence, specifically if there is a violation of the lows of the previous lows, which is the case just by a few points, but we have a new lower low on RSI confirming that signal of bullish hidden divergence, and was enough to produce or to impulse silver into another move to the upside. So we have already signs of bearish divergence. Let's not try to anticipate more upside momentum from this price zone. I don't think this is the price zone to consider that. But eventually a 5-wave structure to the upside on silver, that points to roughly to $30.40. Just a new higher high will be enough to complete that sequence. Actually, we have already the sequence completed. I'm just projecting, I think, the symmetrical projection comes a few points above. Yeah, but I'm just projecting a symmetrical pattern or a projection 5-wave structure to the upside, where the wave 5 is equal to the wave 1. So that's one of the criteria that I always search when I try to identify a 5-wave structure to the upside or to the downside. I always try to identify that symmetrical move from wave 5 and wave 1, and that points roughly a few points above the recent high. But we have already signs of bearish divergence on silver, so pay attention to the eventual pullback from these levels. Will not be a surprise, even if the price starts to pull back from these recent highs. Let me try to adjust these. 28.75. Even that pullback may offer some, may offer some support for more upside. Let's see. Far from gold behavior, which has already printed new historical highs, so we have silver very far away from those levels at this point. We already discussed crude oil, and attention on crude. We have also signs of extreme overbought conditions, so a period of a pullback will not be surprised, which may force that bounce on the dollar versus the Canadian. Pay also attention to SPX 500, 113% Fibonacci extension already achieved, so that completes the bearish outpath pattern. And just to clarify, everyone or those who are following me already know this for sure. The bearish outpath pattern can turn into a crab pattern very easily, very similar as the butterfly pattern that I showed you before. So the market may also extend towards the golden Fibonacci level, and if that happens, we will consider that possibility. For now, I think we should consider the retracement. We have also the previous resistance level right there, the monthly fractal resistance, 56.80. So I admit that possibility also for SPX 500. The German DAX also approaching major resistance level, specifically the trend line or a descending trend line resistance approaching from above, also for the German index. So let's see how the market reacts. I will expect at least a period of consolidation or move sideways after this fast V-shape recovery. So I will admit even the formation of kind of a edge and shoulders or an inverted edge and shoulders if the price starts to pull back from here. So ultimately, the violation of the highs of 18,928 level of resistance may trigger more bullish momentum. Now let's discuss the Bund, which remains above this structure support. Actually, we have a daily fractal support at 134.05 and daily resistance at 135.13. That's the range for the Bund. I admit a retracement or a pullback from that, actually after the formation of that pattern that I was expecting that pullback, and I remain loyal to the pattern. So we have also the symmetrical projection for this same pattern. Let's see how the market will behave, but that's one of the possibilities to unfold into a symmetrical pattern that points to 132.18. So basically, or roughly, to this previous fractal of resistance levels. Then, of course, bonds, very much similar in terms of price structure. The same pattern may start to unfold if the price breaks the support level. So I admit also more momentum to the downside if the price breaks below this daily fractal support. 112.25 is the most recent fractal, below 114.02 fractal resistance above. So of course pay attention to those levels of those fractal levels also for the bond. Finishing with the crypto market, we have the Bitcoin. We discussed this possibility last week, the violation of this fractal resistance level, 61,800, approaching the golden Fibonacci level, but ultimately the 88.6% Fibonacci level, $67,685. That's where the bearish path pattern will complete for Bitcoin. So after the formation of that pattern, I will expect momentum or a move to the downside or a pullback also for Bitcoin. Ethereum, I was projecting, or I was tracking this minor lower degree edge and shoulders pattern formation. Of course, if Bitcoin starts to bounce and trades higher, Ethereum tends to follow. So, and at some point invalidated this possibility. To consider, or levels to consider: the 38% Fibonacci retracement level, 28.57, so that's a 38% Fibonacci level. If the price breaks above, of course, I will target the next Fibonacci level, the 50% Fib. But at this point, it looks like the previous support level is acting as resistance. So the previous lows acting as elements of pressure and as resistance. So I admit more move to the downside. Eventually, if the price breaks below this daily fractal support, we may discuss later the retest of this support, or we may be discussing later the retest of this previous level of support for Ethereum. So pay attention to these price zones that I shared with you today, and I hope bring some value and bring some interesting price zones for you to consider, synced with your own, of course, with your own strategy. I hope you enjoy, and I hope, of course, and I wish you all a beautiful trading week ahead, and I hope to see you in the next video.